So sometimes supply and demand zones are going to be too large for us to trade, whether it be they're 5 points wide or 10 points wide. They're just too large for us to hop in when we get to the front of the zone, and then they're too far of a stop loss if we wanted to stick with the system and put it at the end, at the top or the bottom of the zone. So I have a little trick that I do for when the zones become too large. And that trick is that if you look into smaller time frames in that zone, you will be able to find different imbalances. So a lot of the times you'll find, let's say, a daily supply zone, but if you go down to a 4 hour or maybe like a 2 hour, you're going to find other supply zones inside of them. And then once price comes up to a supply zone, I'll know that, yeah, we're in a weekly supply, but maybe we have a daily or a 4 hour a little higher than we are. And I'm going to wait for price to come into that zone and wait for us to reject. Same thing to the downside. Let's say we have a demand zone, which is, I don't know, 7 points wide. If you look into a smaller time frame, if we're talking about a 4 hour demand, let's say, you might be able to find a 1 hour demand or a 2 hour demand or a 30-minute demand. And then that zone, that imbalance is going to be lower than where the start of that 4 hour zone originated at. And it's going to give us a smaller risk and a potentially higher reward because we're obviously buying lower or higher in the zone, depending on if we're talking about supply or demand. So really fast, this is Boeing, a 4 hour chart without pre-market, as obvious. We have a drop here, kept dropping, dropping, dropping. Now we have a nice red basing candle, nice lower wick. Obviously buyers were interested down here, hence the lower wick. So this is a nice drop, base out, followed by a rally. It's a 4 hour time frame, so this green candle is 4 hours. So I would consider this obviously a drop, base, rally. So what I do is I put a line at the start of the red candle, extend it. I go to edit properties. I name this 4 hour demand, and then I'll make this green. Then for illustration purposes only, I get a rectangle, start it at that box, and I extend it to however long I want it. So now we have a 4 hour demand zone. Now, if you were to look here, this 4 hour demand zone, if we stuck to the plan and got long in this box and put our stop loss below it, it obviously would have worked. But if you're day trading, this trade might not have worked for you, but as a swing trader, it would have worked. So what I do is, because this zone is from 139 all the way down till 132-ish, 133-ish, 6 point zone, to narrow it down, what I'll do is I'll go into a smaller time frame. I'll now look on a 3 hour zone. 3 hour, we see the same thing. See a drop, a base, rally. The zone starts at the same point, right? Now we'll go to a 2 hour zone. I'll make it here. 2 hour zone. We do not see a demand zone. Yeah, we have a drop, base, rally, but we don't really have a clear looking zone. 1 hour. And then there we go. We have a drop. We have a base. We have a rally. This is the type of structure I look for. Now I'm going to make a video. My next video after this video is going to be what type of structure we look for inside a demand zone and what kind of structure we look for in a supply zone. But the point of this video is for when zones are too large, you have to look for other supply or demand zones that form in the larger time frame zone. So right here we have a 1 hour demand zone. Market, price level, I'll make this green and I'll name it 1 hour. I don't know why I didn't go green. Okay, so now we have a 1 hour demand zone. Now, if we were day trading this, I'm going to go into obviously a smaller time frame. This trade would have worked if we were swinging it, but if we're day trading it, because I know a lot of people do day trade. Let me go here, make this 20 days. If we were day trading this, we had a nice bounce. So if we were to take this long, let's say from demand, let's say we don't know what happens, right? Let me turn pre-market back on. So let's say we don't know what happens. We're just watching this, right? We're focusing on this day where my cursor's at. Fell down right into demand. We're looking to grab calls in demand. We're day trading this. So we're putting our stop loss below the higher low we made. And then we would get long somewhere in here, put our stop loss below here, right? This trade, if we were day trading this, focusing on such a large zone like this, we would get long somewhere in this area, put our stop low here. Look what happens. Yeah, we had a nice move. So if we didn't sell this, if we didn't sell it up here, watch what happens. Price keep coming down. And then we broke that low. We would have got stopped out. Yeah, it provided us a nice 3 point move to the upside. But if we're day trading this and we're looking to take profits at the following supply zone, or if we were waiting for confirmation on a 15-minute, it might not have looked as clear as this does look. But we would have got stopped out if we put our stop below the low and we didn't sell up here. That's what I'm trying to get out of this. But if we knew to put a smaller time frame demand zone inside the larger one, we might not have gotten long here. We might have waited for this 1 hour to hit because obviously it's lower and it's going to give us a better risk to reward. So if we waited the rest of the day, price kept selling off right into this 1 hour demand zone. Look, we're bouncing right at the start of this demand zone. Now, the next video is going to go into this, is what exactly I look for, what type of structure I do to take long. But the start of a demand zone or the start of a supply zone, if we come into that level and we bounce at the start, we bounce at that line, The highest probability of the trade working out is what I found to be at the start of a demand zone or the start of a supply zone. So you could have taken this long right here at 135.70, put your stop loss below this low, and you could have got a nice move to the upside. We rallied pretty hard. I probably would have sold on this quick pop. I don't like quick moves, obviously, because that means there's people selling up here if people are buying. So this would have been a good trade. Now, if we're day trading it, right? So if we didn't take profits up here, we didn't take profits up here, this trade would have not have been worked out for day trading. It all depends on your risk, and it all depends on how you take profit. It's going to be different for every trader. You know, people are going to have different entry points. People are going to have different exit points. So it all depends. But the probability of these trades working in these zones is very high. And that's why I'll always day trade with options that have time. I'll buy a week out, or I'll buy 2 weeks out, depending on the day. So I don't have time decay messing up on me. And if I want to turn this into a swing trade, I could easily hold this overnight if I got long here as a day trade. So let's say I got in long here, but my stop loss below the box because I bought contracts that were going to be good enough to hold it as a swing trade. This trade would have worked out because look, we bounce, bounce, bounce. Now we're holding this as a swing trade. We're going to put our stop loss tomorrow. If we open below this box, look what happens. You know, we gap up from this 4-hour demand zone. So it really depends on the type of trade you're looking to put on, and it really depends on your risk tolerance. So if you're day trading this, my point is you know, focus on contracts where you could buy time so you can turn it into a swing trade if need be. If you're a day trader, this would have been a loss for the first, I don't know why it's doing this. If you're a day trader, like I said, this would have been a loss if you put your stop below the lower day. It's not always about catching bottoms. It's about buying in the right areas. So let's look at another example. We're going to go on Apple. I'll go here. So Apple on April 21st, we had a 4-hour supply zone. So let me go to equities. We had a nice drop, base, drop. This is the nice basing candle I look for. It's a green candle for a supply zone. It's a high probability area where the market could possibly turn. So now what I'm going to do is I'm going to go into a smaller time frame. Once we have the 4-hour marked up at, let's go into a 1-hour maybe. So 1 hour, we have a rally, a base, a drop. You can draw a supply zone starting here. So we have 4-hour inside of a 1-hour. I'm not going to label this for illustration purposes, but look what happens the first day. This zone right here, we rejected. This is going to be in the next video. So higher time frame zones, 4-hour dailies, you can trade off a smaller time frame for confirmation. It's going to be in the next video. But my point is that this is a larger type of zone. It is from 284 all the way up till 288. 4-point zone. 4-point risk. That's a lot of risk for someone that might not have a big account. That's a lot of risk for someone to put on if they were to get at the beginning of the zone and put your stop at the top of the zone. But if you were to go into a smaller time frame, such as an hour, we had another supply zone in here. So we have supply inside supply. That's going to be double confirmation. That's going to be an extra area to be cautious about because we're possibly going to reject. We have an imbalance inside of an imbalance. So on April 28th, you know, we opened up in the supply zone, came up into it, and we rejected it. You know, right here, we're inside 4-hour, but inside the 4-hour, we have a 1-hour imbalance. Same thing. Let's look at NVIDIA. This is on a larger time frame. So NVIDIA on a weekly chart. Let's go to a new thing. Okay, so NVIDIA on a weekly chart. We have a drop, a base, a drop. This is a weekly chart, so every candle represents 1 week. Right here, we have supply. This is from 178 all the way up to 185. It's a big zone. So what I do is I go into a smaller time frame. And you will find we have a supply zone here. But we came into this weekly supply and we formed a nice basing candle. We formed a nice rally, a base, a drop, and that would have been a good trade. That's not the one I was looking to illustrate. The one I was looking to illustrate was on August 22nd, 2019. August. Okay, so it's this one right here. So right here we have a rally, a base, a drop. I'm going to draw a line from here. The rectangle obviously goes up from here to here. Make this pink. Okay, smaller time frame, right? For us to get short in this area, we really have to reject on a smaller time frame. Would have worked out well because obviously we had a red candle. So I'm going to go right now to a smaller time frame. I'll work my way down the ladder of time frames and I'll find other imbalances. What I see here is we have supply up here. This is the example I just mentioned before. You know, we have supply here. This previously rejected weekly. supply, and then we also have supply right here. So let's ignore this trend level. So we have a basing out area right here, followed by a nice drop. This right here, this green candle, is a nice basing period, followed by a drop. It is a daily supply zone. So if you look what happened is, we shouldn't have shorted at the start of the weekly supply. We have to wait for smaller time frame imbalances because we can find those imbalances form in larger ones. So this was daily, came right into daily. It gave us an extra 4 points from the start of the zone to where we would have shorted on a daily chart, and then we could have rode this from 173 all the way down until 159ish, 158ish. So that would have been a good trade. But you have to look for smaller time frame zones in larger time frame zones. So if you're in a weekly zone, go down to the daily, then go down to a 4 hour, then go down to a 2 hour, and try to find imbalances as price gets closer to those levels. Same thing if you're looking on a 1 hour chart, and the 1 hour chart's way too big. Maybe look on a 30-minute or a 15-minute, and you might find other imbalances that are going to help you get more less risk and more of a reward because it's going to go deeper into that large zone.